Welcome to the Daily Market Recap. Today is Monday, August 3, 2026. Bulls came out to play today as Wall Street kicked off August on a high note. The major indices pushed higher after geopolitical tensions cooled off significantly. Former President Trump announced he called off a planned military strike on Iran to pursue diplomatic talks regarding the Strait of Hormuz that sent crude oil prices sliding over 5%, stripping away a massive cloud of geopolitical inflation anxiety. Investors breathed a massive sigh of relief and flooded right back into equities. Green dominated the board today. Technology and communication services led the rally, powered by mega-cap optimism and lower bond yields. On the flip side, energy took a hit alongside tumbling oil prices, while defensive sectors like consumer staples and healthcare lagged behind as traders rotated into growth names. Overall, Q2 earnings continue to crush Wall Street estimates, with triple-digit profit growth reported across energy, consumer discretionary, and communications. And where does overall market emotion sit right now? The Fear and Greed Index reads 46, keeping us sitting comfortably in neutral territory. Neither crazy greed nor panicky fear is driving the market, just a disciplined wait-and-see vibe as major economic reports loom. Our top news story today, geopolitical tension got dialed down several notches. President Trump posted on Truth Social that he opted against an attack on Iran, urging diplomats to get to work and complete a deal to open the Strait of Hormuz. Crude oil plunged over 5% instantly, handing Wall Street a huge sigh of relief and fueling a broad market bounce. Story number 2, Q2 earnings season is turning into an absolute powerhouse. Out of the 306 S&P 500 companies that have reported so far, a staggering 86% have beaten earnings expectations. Total corporate profits are up 57% year over year. Analysts set a low bar entering the season, and American corporations are jumping clear over it. Story number 3, macroeconomic data is rolling in. Traders are digesting fresh manufacturing numbers from the ISM Manufacturing Index while prepping for Friday's big non-farm payrolls report. Wall Street is looking for an addition of 80,000 jobs, with unemployment holding steady at 4.2%. Crucial clues for the Fed's next interest rate decision. Now let's dive into everyone's favorite segment, the biggest individual movers and shakers of the trading session. Time to see who brought home massive gains and who took an embarrassing nosedive. In the winner's circle, Atcore surged on strong industrial demand and solid quarterly operational performance. CoreWeave rocketed higher as hyperscale demand for AI infrastructure and cloud computing power shows zero signs of slowing down. Photronics popped following impressive demand for semiconductor tooling, and fintech star SoFi Technologies surged on strong member growth and robust loan originations, driving heavy buying. Over in the loser's corner, Sportradar Group slumped after elevated operating expenses squeezed profit margins. GameStop bled red as retail meme momentum dried up without a fresh fundamental catalyst. AstraZeneca slipped following mixed updates on recent clinical trials, and e-commerce giant eBay stumbled after delivering soft forward guidance that disappointed Wall Street analysts. Let's bring up the charts and break down the technicals. Starting with the S&P 500 ETF, SPY pushed back above key short-term moving averages. Immediate resistance sits overhead at $555, with a breakout opening up a clear runway toward $562. On any market pullbacks, watch $542 as key initial support, with a stronger floor down at $535. Moving to the tech-heavy NASDAQ ETF, QQ buyers stepped up to defend trendline support nicely today. QQQ faces tough resistance near $485. Clearing that hurdle sets the stage for a retest of $495. On the downside, $470 serves as primary support, while the 50-day moving average sits around $462 as a key trend indicator. For small caps via the Russell 2000 ETF, IWM caught a bid as interest rate yields leveled off. Immediate resistance for IWM looms at $222, followed by a major breakout pivot at $228. Support holds firm at $212, with a deeper safety net waiting down at $205. Switching over to digital assets, Bitcoin traded in a solid range around $63,700 to $64,000 today, holding firm as risk sentiment returned across equities. BTC bulls face immediate overhead resistance at $65,500, which needs to break to target $68,000. Key support rests at $62,000, with $60,000 acting as the critical line in the sand. Ethereum mirrored Bitcoin's consolidation, trading steadily around $3,450 as consistent spot ETF inflows provided a solid floor under price action. Resistance for ETH sits at $3,580, followed by $3,700. Downside support holds at $3,320, with stronger buying interest around $3,200. Across the broader altcoin space, performance was selectively positive. Layer 1 protocols and AI-related tokens outpaced the market, while meme coins took a back seat. With Bitcoin dominance holding steady, traders are waiting for BTC to break out decisively before committing heavy capital to speculative altcoins. To wrap things up, market sentiment is leaning cautiously optimistic as corporate earnings deliver big beats and geopolitical heat cools down. However, with upcoming ISM economic releases and Friday's non-farm payrolls report on the horizon, expect volatility to stay elevated. Keep your risk managed and stick to your trading strategy. If you enjoyed today's recap, smash that like button, hit subscribe, and turn on notifications so you never miss a daily market update. See you all tomorrow.